Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, September 1st, 2025. Hope you guys are having a fantastic Labor Day weekend, and let's get started. I was actually off on Friday. I wasn't even able to see the economic numbers, but the PCE numbers came in pretty much in line. But futures are already a little bit under some selling pressure, and really it was the end of month profit taking, that type of stuff. So we had the S&P close down about 40 points, and it's we're at a point right now where we this is what I'm looking at with say the short term is we look like this move right here. This is say the flag pole, and right now it appears that we're making just a bear flag. So basically, if this is going to play out, we would see the S&P get held down somewhere around that 64, 68, which is only 8 points above. And if it does, and then it can take out this bear flag, what we're looking at is a move that's going to bring us down somewhere into the 63.98 level, and that's just an ABC move. So if that happens, you can see the 6406 is the 62% retracement. ABC move. Actually, let me do this because I don't believe that would be the actual number. So, let's say we do get some type of bounce in the morning and it makes it up to this level, then our ABC number would be. Hang on one second. Okay, so here we go, 6405. So if we go back to the 5 minute, you can see this is really the target on the downside, 6406, 6405, 6400. If we break below 6400, then you anticipate that we're probably going to be coming down to the 6300. So that's really going to be the line in the sand for the bulls. If they don't defend that, we're heading down to the 6300, and from there, they're going to have some work to do. So early this week, like I said, with the pattern, I would expect some lower before higher. But if they decide they're going to gap above this resistance level and break through that bear flag, then we're going to be looking up and seeing if they're going to come up and close the gap right around that 64.96 level. So we could even do this. Let's just take it a step further. Sorry about that. And say, okay, so here's if we're going to get a bounce, you can see this is the actual gap, 60. That's right around that 6502. But we have a 78% retracement at the 60, right around that 6500. So if they gap above it, this is going to be natural resistance right here. And as I said, like this week, I'm kind of on the fence because we had a decent move to the downside. Typically, they'll come up and test these highs again. But as we go into next week, I'm very, very concerned. I'm not even concerned. I'm more cautious. And unless the bulls can sidestep this bearish cycle that is scheduled to be hitting next week, then then we'll be able to just go back to things as normal and just look to pick some good stocks as well as trade the long side on the markets. But we really have yet to have any really deep pullback since this rally started all the way back in April. I mean, we've had a couple, but they're bid right back up. So we're looking more of something on a time period that is going to that's going to get really give the indexes a chance to retrace some and really dissect the move that we had. So if we just do some fib retracements from this low in April and bring it up and just assume that the 6505 area was the top, on a bare minimum, we're looking at a move coming to 6100. But if I'm really leaning more towards us coming to the 50% retracement, closing this gap, and that would be somewhere in the October time period, and then from there we make the move to new all-time highs again. So I'm not looking for any kind of bear market. I'm just saying there's a lot of things that are lining up that are looking for a drop to come, and it could start sometime next week. Here's the daily chart. You can see we got massive sell signals on the 60-minute chart. We got sell signals. So there's a lot of warning signs, and like I said, the cycle analysis is looking for a top looking for a decline to start. Really, it's scheduled for sometime next week, but it doesn't always mean it has to start on that time period. So I remain on the cautious side. If the bulls prove it wrong and they're able to take things to new highs and not have to, we just stay above it. Then we just move back to the long side and start trading, IWM again, and because that will outperform. So right now, we're pretty oversold on the hourly chart here. If we head down, you have to really keep an eye on the 64.28 level. This is support. If that holds, now what could play out? Again, I don't know if this is going to be it or not, but if you use your imagination here and say, all right, well, there's the left shoulder, here's the head, and if we come up and make some kind of bounce at here and come back up to these levels and maybe even close the gap, that can be your right shoulder. And from that level, the actual target would be, let's measure this out. This is if it went all the way down to this right here. So if it does, let's say that this is the pattern in play, this is looking for a move to bring us down somewhere into the 63.50 level. And you can see we have the support right at the 63.44. Below that, that's where we start looking at the 6,300 as important support levels. So the bulls, they're still in control. We have not made any lower lows or lower highs. So this is going to be really the first line in the sand. Right here is the 64.30, because if we take that out, we're now making a lower low, and if we bounce up and we fail to take these highs out and then take out the lows, we're now going to start having a series of lower lows and lower highs, which would put the short term direction in the bears camp. So we got to see what's going to play out. Like I said, I'm kind of open minded right now as far as direction. I definitely be leaning a little bit on the short side, or if we get rallies, look to possibly build a short position. But like I said, I'm going to be very very careful on this one, and I want to wait for some support levels to break before jumping in. But I'm right now I'm definitely on the extreme caution side of things. And, if we get the pullback that we're anticipating, then, we'll look to pick up some good stocks, maybe that IREN again, if it pulls back, because that's going to be a big winner come year's end. The AI stocks, the quantum stocks are another one. So I'm hoping for the pullback so we can buy these on the cheap. But if not, like I said, we're just going to continue higher. But there's just a lot of warning signs out there, as well as the cycle analysis that's telling us to keep an eye out for some kind of turn that could start sometime early next week. So here's our IREN trade. I recommended it right around that 22. Well, actually, I recommended it here at 22.50. Came up, pulled back a little bit. This was the high, 29.58. So these options that we could have bought, well, that we bought for $1.40, if you're able to get out at the top here, you're talking about almost a $5 a win on that with an option. You risked it 1,400, but you made 5,000 or 6,000 on it. So it was a fantastic trade. This is what I'm going to keep doing moving forward, is looking for stocks that have a potential to pop or drop pretty hard, and we just take our option positions on that. So right now, again, I'm open-minded whether we're going to have to come up and maybe retest these highs, or if we start breaking through support, then we start just leaning in that direction as far as shorting rallies. But until we see support broken, we got to give the benefit of the doubt to the bulls, and we are pretty oversold right here. But a bounce up, like I said, anywhere around this 64.91 all the way up to 6,500. I still like the short side on it. If they can get above this level, then we're looking at the S&P coming up to the 65.50, 65.60 level. Again, downside, we're looking at that 63.40 if it's going to be an ABC. So let's see what plays out tomorrow. Enjoy the rest of your long weekend, and I will talk to you guys in the morning.